think it's really important. Let me just put it that way. I don't think the history of money is important. And I think, in fact, that it can take us off track. But I do want to say just a couple of things about that. Number one, the modern day ability to trade currency goes back to when Nixon tried to institute price controls to contain inflation. And then that didn't work. Like, there was a time, the year I was born, actually, 1876.
Oh, wow.
The year I was born, Nixon was trying to institute price controls, and then he couldn't do it. Like, they couldn't contain the price of milk. Like, it just won't happen. Or when the oil embargo of the 70s happened, and people were just lining up around the block to buy gas. People don't think about it, but that's the origin of the free-floating currency market that exists today. And we can have a lot more conversations about it, but the currency market that we can trade today has its origins in governments trying to contain the price of its own currency or contain the price of products and goods and services. For example, in the early 90s, the Bank of England tried to keep the British pound at one stable rate. And then George Soros fought the Bank of England. He made $1 billion breaking the Bank of England. Like, they couldn't contain the price. It was probably 10 years ago, not 10 years ago, but around 10 years ago, the Reserve Bank of New Zealand was issuing these bonds, and Japanese investors were just buying all of these bonds, and it was driving up the value of the New Zealand dollar. Here's what was happening. Interest rates in Japan were 0. Interest rates in New Zealand were 6 or 7%. And so traders were just selling yen and buying New Zealand dollars. So it's really like 16 years ago there's like a 3-year period. And the New Zealand dollar was just shooting to the moon because they were selling yen and they were buying these New Zealand bonds. And so the New Zealand bonds, the only purpose of those is the same purpose for which any country issues bonds. They just wanted to support their ordinary course of business as a nation. And New Zealand hated these traders. They hated them because these traders were just driving up the price of New Zealand, the New Zealand dollar. So it was making the New Zealand dollar like the strongest currency in the world. Well, guess what happens when your currency is really strong? Like, if China wants to buy lamb, like literally, like a bunch of lambs, or milk from New Zealand,
right,
they have to use New Zealand dollars to do it, and it made New Zealand milk way more expensive. And so there's all these milk farmers out there that are literally having their livelihood disrupted because of Japanese bond investors. Like, the interconnectedness of all of this. And that's because everything just now costs whatever people think it should cost, and that includes currency. Mm-hmm. If you think the New Zealand dollar ought to be valued at more because the New Zealand bonds are paying 6 or 7% interest, then you're going to do it. And New Zealand tried to fight this. They tried to fight off, but they couldn't do it. Like, currency traders won again. And then fast forward to, of course, the giant Swiss National Bank event. Now, I don't know, you're kind of new to all this stuff here, Justin.
I am. Yep.
So a few years ago, the Swiss National Bank hates currency traders. They hate speculation. They love having their currency backed by gold. They love stability. They don't love foreigners. It sounds terrible. It sounds like I just called everybody in Switzerland a racist. But, anyway, the point is, they don't like currency traders. They don't like foreigners. And what they did was, they decided to give everybody a real just kick in the crotch. And what they did was, they unpegged the value of the Swiss franc from the euro. So the euro Swiss franc was just basically a straight line. It was like a dead car accident patient laying in the hospital. It just wasn't going anywhere. And you could literally day after day after day after day, if the euro Swiss franc dropped just a little bit, you could buy it, and then it would rise just a little bit, and you could get out. And if it dropped just a little bit, you could, and people were just doing this. And day after day after day, it just seemed like there was a floor on the euro Swiss. And so what happened was, inside of all the currency brokers, there were these way lopsided positions. At midnight every night at a currency dealer, half the just the way things work, just the natural law of the trading jungle, about half the traders are long and half the traders are short the euro. And that's just the way it is. And every once in a while, traders will be like 50.5% long and 49.5% short.
Oh, wow.
And if that happens, that's monumental. That's a giant thing. And the currency dealer needs to sell some euros to balance out the positions and make sure they're not one-sided. Well, on the Euro Swiss, it was like 90% of traders were long. It was really bad. And I think Switzerland knew this. They're like, oh, you think there's a floor on the Euro Swiss franc. Now, the Swiss franc's backed by gold, a stable government, a stable economy. Does anybody even know who the president of Switzerland is?
I don't have a clue.
It could be Katy Perry, for all we know. We don't even know. No one even cares because it's so stable, it just flies under the radar. Well, the Swiss National Bank had enough of currency traders speculating in their currency. And what was happening was they were afraid, what they were afraid of is that someone else outside of Switzerland was beginning to dictate what the Swiss franc should be worth. So they unpegged the value. What that meant was suddenly, if you wanted to sell euros and buy Swiss francs, which everyone was doing, I mean, literally, the little secret behind the secret was the euro really wasn't worth more than the Swiss franc.
Right.
It had all kinds of Southern European debt and all kinds of political problems. The Swiss franc was backed by gold. They unpegged the currency and it dropped 1,000 pips. And in 1 second, one of the largest currency dealers in the world literally went bankrupt.
Oh, wow.
The second largest, FXCM, or third largest, or maybe first largest by some measurements, went on the verge of bankruptcy and had to take out an emergency loan. They never recovered. They never recovered from it, and they don't exist in the United States anymore. They never recovered from that. Another currency dealer, Forex.com, they had seen this lopsided activity, and they had hedged all their bets, and they made a killing on that. So what's the lesson from that? The lesson is, look for places in the world where there is this battle and there's a war going on about the value of a currency. There's a war going on between traders and a central bank, because that's where the big stuff's going to happen. You could have said a couple of years ago that was the Chinese yuan. You could have said that a couple of years ago. I don't know if that's still true. I don't know if that's accurate now, but that's probably one part of the world where this is going to play out the most. Imagine, what currency is Donald Trump the angriest about? And you got to imagine it's the Chinese yuan. Like, that's where the biggest potential trade war happens. And there's been a long-standing group of politicians in the United States that want to accuse the Chinese of manipulating their currency, and Donald Trump may provide them their dream come true. And that would set up one of these massive all-time great trades. Anyway, there's a lot more to talk about the history of money. And I said at the beginning of this episode that I didn't want to talk about that, and now I've just proven otherwise. Maybe it is interesting. Next time around, on the next episode of PBS's the pesky interest rates. You know, one of those like Dateline things where there's a murder?
Right.
Murder at Bretton Woods. Oh, the pesky interest rate cycle. So we could maybe do an episode about that later on and talk a little bit about how there were two major dates in the last 30 or 40 years in history where the modern currency market came into being. But I really want to talk about Jekyll Island too, and some of you already know what I'm talking about. So if you know what I'm talking about, you can hit me up on the Twitter at Rob Booker, and we can talk a little bit about that. Hey, it's Rob Booker, everybody. Thanks for watching this video. If you want more great content and you're on the Booker Wealth site, go to the bottom right of this page and just watch more videos. I got a ton of them. Or if you're on the YouTube channel, just hit that subscribe button and the bell, and I'll let you know when I make new content. I love you all. Have the best day ever.